Welcome to Helping Leaders Achieve What Matters. On our podcast today, we have a special guest. Her name is Carol Eversen, and she is a chief marketing officer that works on a fractional basis for an organization called Chief Outsiders and a member of Vistage. She is a marketing expert, and today she's going to give us some insights. Now, as you may know, Carol, our audience is CEOs of small to mid-sized businesses doing anywhere between 10 million and 500 million in revenue. So we're looking for insights to help them really achieve their marketing goals that matter at that level. So please welcome Carol Eversen.
Well, thank you, Mark. I really appreciate it. I'm happy to be here. And just to start the call, one thing I do want to share is that I'm relatively new to Vistage. I've been with Vistage a little bit over a year, but I feel like I hit the lottery of Vistage chairs and of the Vistage TA groups. I'm very fortunate that Mark is the chair of the TA group that I belong to in New York City. And I'm very happy to be here joining you and appreciate everything you've been doing.
Oh, thank you, Carol. A TA group is a trusted advisor group. It's a special Vistage group that's designed for professional service providers like Carol, and we're so glad you're a member of our group.
Happy to be here.
So, Carol, what is Chief Outsiders? Can you tell us a little bit more about that?
Sure, absolutely. We are a company of about 120 former chief marketing officers, chief sales officers, and basically we work with clients to help them grow their business. We are not professional consultants. Most of us have worked until very recently in the business, and almost all of us started in large companies, but then pivoted our career to small and mid-market companies. I've done everything from pre-revenue to pre-revenue startup to a $12 million company up to AT&T and MasterCard in my early days. So we bring all that together to help companies grow.
Got it. Now, the title that you came up with for this podcast is How to Survive the Boiling Pot Syndrome. Prepare to Pivot. Can you tell us why that title?
Well, it's interesting. There are so many things that can happen that cause a company to need to pivot. And so often we're not seeing the signals. We're not noticing that the pot's getting hotter and hotter. And we're in the pot and we're like, come on in, the water's fine, everything's good, it's okay. And we don't always notice that things are happening that we should take note of and adjust. Everything from changes with the economy, certainly COVID, everybody knew what was happening then, and were forced to pivot because there were little options. But other times it might be competitive changes, it could be industry structural changes, or it could be the economy. And that's why when you see that things are changing, if you are the leader, and your job is to ensure that the company thrives, not just survives, but thrives. If you're not sensing the changes that are happening, and if you're not prepared, you won't end up in the situation that you want when something arrives and develops in the market that you weren't even contemplating. So that's why it's all about how do you both recognize and then adapt to ensure that you pivot.
What are you seeing at Chief Outsiders about the economy?
Well, actually, it's interesting. Let me just show you a couple of quick data points that we're noticing. And we're not economists, so I'm not going to pretend to be an economist. But what I can say is I follow them and I listen and I pay attention. And there's some urgency, but it's not obvious urgency. So, for example, if you look at the data here, what you see is the market's doing pretty well right now. There are little bobbles here and there, but overall, it's a generally very healthy trend. And that's good. That's great. Also, if you look at unemployment, we were up about 5%, dropped down to about 3.5%, a little bobble back up in September with the data that was released or that we see so far going into September. But by and large, this isn't a bad story. So it would be easy to say, oh, everyone was talking about recession, but it hasn't happened. It's not going to happen. Let's just go business as usual and not worry about it. And by the way, I'm not today going to be this doom and gloom person. I actually, it's possible that there will not be a recession. It's possible that everything is fine, but it is always wise to have thought through what might be happening and have contingency plans in the event that you need to kick them in. So this is not the sky is falling, we need to deal with it. It is everything as rosy as this looks? And if not, maybe there's something that we should be doing. So, what are the indicators that cause us to think about, is something changing that we haven't really contemplated? There are several, and I've just noted some that have come up this week. For example, about a half hour ago, I noticed in the news that the UAW actually did end up going out on strike. That might be impacting some of the folks on this call. In fact, if it is, they may not be on the call right now. They may be dealing with their pivot at the moment, but it's it's certainly going to impact businesses. There's an estimate of about $6 billion in negative economic impact from that. If you look at the credit card industry, consumers we just went over at the end of second quarter. We just went over $1 trillion in credit card debt for the first time in the U.S. And there's a lot of talk about the fact that in January of this year, it was the first time in recent history that consumers didn't pay off their holiday debt. In other words, they kept rolling with some of the loans and kept the credit card balances up. With the credit card rates that are high now, that's a bit of a challenge. Then we've got the situation with inflation, which is better than it was. It was up very high. Now we've dropped some, but it's still, I think, like 3.7%, if I recall correctly, against the moves that have been made to try and curb inflation by taking the interest rates up. So you've got that tension right now that's going back and forth between interest rates and inflation. You have a lot of pundits that have different points of view about that. Some are very doom and gloom. Some are, it'll all be okay. Nobody has a crystal ball, so it's hard to say exactly what will happen. Every economist uses assumptions to get them to a certain point with their forecast. So who knows whose assumptions are right or wrong? What it portends, though, is the need to think about what if inflation stays high? What if interest rates go even higher? What's the impact for my business if those things happen? If you look at the producer price index, the PPI, that actually was just announced yesterday. In August, we had a 0.7% increase, which is the wholesale price increase, essentially, versus what the analysts had expected, which was 0.4%. So what that means is in about a month, consumer inflation is likely to go up as the wholesale rates trickle down to, the impact on consumers. And then finally, we have the situation where folks that have student loans have been able to spend that money on discretionary items. And those loans, the payments go back in starting October, and the interest is starting to build again now as of September. So all of those factors have impacts on, what's going to happen. And to me, I think it's important, depending upon a business, like some of these are going to be more important than others. But if we're not aware of them and thinking about them and trying to figure out, okay, so what do I do about it? We're going to find ourselves in a situation where we're just not prepared. So step one is, and this is just a handful of things I happen to pick up over the last day, so there are more, but to me, I think what's important as a leader is to understand what those factors are and to then make sure that you understand what's happening to each of those factors. One of the things that Chief Outsiders does leverage quite a bit is ITR economics. We are active in following ITR, looking at the trend reports, looking at all the industry trend reports. And I'll just share, this is their forecast for the economy, essentially slow down by the end, and the years are by the end of the year. So slow down by the end of 2023, recession by the end of 2024, although they're very quick to say they think it will be a relatively mild recession. I don't want to speak for them, but that's what I've heard them say. And then things start building back by the end of 2025. So that means change if that forecast comes to fruition. I'm sure there are other economists that would say, no, that's not going to happen. I tend to listen and then try and think, okay, what's the implication? What do we need to do to be prepared in the event that some of this comes to fruition?
So what would you recommend? What would be your, help our leaders do what matters here? What would be some actions that they could take to prepare?
Well, the first thing that you need to prepare, if you're the leader, the first thing is you must be thinking about this and reading the tea leaves. Step one is definitely, understand the economic drivers that impact your business. I imagine most CEOs do. Maybe you don't always think about, is it time for me to be planning? You don't want to wait until someone formally declares we're in a recession and it's doing, a nosedive, or the United Auto Workers went on strike. Ooh, that's going to impact me. Now I need to plan. You want to think about that and be proactive and have a plan in advance. So that's step one. The second thing I would do if I were a leader is scenario planning. What are the options and how can I look at this? If this happens, that happens. What's my competition doing? How do I proceed? The third thing I'd do if I were a CEO, and this is an interesting one, is engage the team in the scenario planning. It's really interesting. CEOs are usually really smart, really know their business, very strong. And some CEOs are very, they pull the team into all of the collaborative decision-making. And some are the person that, make the hard calls and they make them fast and, you move. And I would suggest when you're working on scenario planning and pivoting, pull more of the extended team in. It's funny, I used to not do that myself. I was a P&L leader at AT&T in a couple of roles. So I ran a couple businesses that were like 200, 250 million. And while I was doing that, I learned that my style was very autocratic and very authoritative. And I was very directive and making the shots and making the hard calls and doing what I thought was the right job. And went through, I'll call it a lobotomy for lack of a better phrase, but basically, I went through this process with some coaching and support to learn that I might get the answer right 90 to 95% of the time, but the 5% that I miss or the 10% I miss are probably the hardest ones and the most important. And they're the ones that require the most diversity of points of view. And so I could get them a good way of the way toward where we need to be as quickly as possible, but would probably mess up on something really critical if I didn't pull the team in. So I totally changed the way I think about management. This is a long time ago, but it changed how I think about management. And I would say pulling in the team and engaging the team is really critical to get a diversity of points of view. And then
I would call it an epiphany rather than a lobotomy.
Yeah, fair enough. That is probably a better phrase. Thank you for that. But after that, after you've recognized there's a need, you've actually, thought it through, done scenario planning, put in the team, make your bet. Like pulling in the team doesn't mean it has to now take a month. It means that you take the time to engage them, and then you ultimately call the shot and place your bet. And it won't, I don't think you have to place a bet that's perfect. You have to place a bet that's good enough. And go from there. And then the last thing is just—
And I would add a step there.
What's that?
I would add something there. I would say, sure, once you come up with this plan with your team, then run it by your Vistage group. Because your team may be industry myopic, and people in your industry group, in your Vistage group, might be able to challenge you, might be able to question your answers, might be able to give you a different perspective, might be able to show you where you're biased or where you have a blind spot. So we say CEOs are in the business of making decisions, and the more impactful the decision is going to be, the more important it is to get multiple perspectives.
That's why you're a master chair, and that's why I've only been in Vistage a year. But you're absolutely right, and I should have added that to my list. I will certainly, make sure I do that going forward, because I agree with you 100%. And then the last thing that on my mind when it comes to what can a leader do is I just think if not you, then who? If you don't decide it's time to take a look at this, who on the team is going to dare to suggest, shouldn't we be thinking about this? And you may have some people that will, but if not you, who? So from a leader's perspective, those are the thoughts that I have. From a planning perspective, when you get into the process of thinking about your plan, Chief Outsiders actually has a methodology that we use, and it's really straightforward. And I want to talk about the methodology, not Chief Outsiders, because this is about the methodology itself, not me trying to sell anybody anything. But it's a great model. And basically, the focus we have, and I've used similar models with different terms, but this one works. So is insights drive strategy, drives execution. If you don't start with the insights, whatever strategy you set will have flaws. And then you end up doing, especially from a marketing perspective, you end up doing a lot of random acts of marketing rather than necessarily executing against a vision. So we recommend this process always, but certainly when there's a pivot situation that's happening. And I can take you through a couple of the questions that you could ask yourself that, and by the way, there is a book about this, but one of the things that you could do is just work through some of the key questions yourself. How are my customers? And let's assume that we're talking about an economic pivot in this scenario. How will my customers respond to tougher economic times? What do the customers value? And it's interesting to me. We do research with clients all the time, and we'll talk to clients' customers to get feedback. I personally work in more of a B2B SaaS type of an environment. So I'm frequently speaking with the clients, the customers of my clients, to get a good sense. They're hotly competed markets. So you want to understand how you're stacking up versus the competition. It's amazing how much we learn in 3 to 5 phone calls and or Zoom calls, just speaking to a client's customers. It's amazing. And they didn't need me to do it, but it helps if have someone that's objective and neutral and that's done it before, knows how to do it. But just pick up the phone and find a way to ask customers questions that you wouldn't normally ask, which is, why did you buy from us? What was it that caused you to select us versus the competition? What are you happy about now? What are you unhappy about now? What are we doing really well? What would you like to see us prioritize to do differently? And you get enough of those, and very quickly you have a really good blueprint of where to go. And if you ask the questions the right way, you also get what do you see coming down the road that's going to be important to you, and how does that impact our relationship? That type of conversation doesn't usually happen, sadly, with a lot of clients. It's typically more of a servicing relationship, taking care of things. Some companies are really good at this. Some salespeople are phenomenal at being ahead of the game. But there's a different conversation when either an outsider or a senior executive that doesn't usually deal with the client on a day-to-day basis. When you have that conversation with the client, you get a different story because they understand you're coming at it from a different broad perspective, as opposed to coming at it trying to sell them something in the moment. And that causes a different conversation. So I think that's really key. Knowing what you think the competitors are going to do is really important. It's really funny. When I worked at AT&T, MCI at the time was the big competitor, and we always had, and I'm not granted, it was a large company with a lot of money, but we always had an MCI team that was constantly gaming out, what is MCI doing? What is Sprint doing? What do we need to be prepared for? What should we be changing? This was on the consumer side of the business. It was like amazing how frequently that work was done, looking at the analytics of the competitors, et cetera. And then finally, who are my ideal customers, and what risks do I have with my large customers I have today, and with what has been my ideal customer profile? Is that going to change? As things change, will the target market be different? And I'll give you a really good example. Again, COVID just made the notion of pivots very clear and obvious. I have a company I'm speaking with, and they're in the party business. Like, they do party hats and decorations and paper plates and all that stuff. And during COVID, they pivoted to making PPE. This is a company that's been around for 123 years, and they knew they had to do something to survive. And they basically realized that nobody was going to go to a party during COVID. So they completely retooled and pivoted to PPE. Now they've pivoted back to parties and they're doing great. But that's the type of scenario planning and thinking that needs to happen, just not because COVID was forced on us, but because you might want to be thinking about change. Any questions about that, Mark, or is that making sense?
No, that makes sense. I mean, Vistage just did some research. Dun & Bradstreet did it for them. And they found that Vistage members actually grew their businesses overall during the pandemic versus non-Vistage members lost, I think it was an average of 5% of their share, and ours grew like 5 or 6%. So it was like a double difference there. And I think that the reason is during the pandemic, that's exactly what CEOs and small business owners were doing, is we were together as a group discussing what can we pivot, what could we do, what are the options, and brainstorming together on different possibilities. So I don't know if your paper hat manufacturer was a Vistage member or not, but that was a brilliant move, and those were typical some of the types of moves that we saw.
That makes sense. And of course, you're right. I'm going to have to redo this entire presentation and add Vistage into everything, which I will do. But that makes perfect sense. Whoops, what happened? There we go. Went backwards, didn't mean to. Sorry about that. So then moving on to strategy, the insights give you the information that you need to ask the key questions. Should I be changing the target market segments for the next couple of years? Should I eliminate some marginally profitable offerings or markets? And, is my messaging still going to resonate, or do I need to change my messaging? Am I tone deaf? Am I coming across like I'm not even astute and aware of what's happening around me? Another example, I was working with a global law firm as a client, and they were ready to do a rebrand about a month before COVID hit, and they were starting, they're global, so they were starting to see in China and other places the things that were happening, and they put it on pause because it would have been just completely tone deaf at the beginning of a pandemic to do a rebrand and go through the money and the communications for something that no one wanted to hear about, nor would have paid attention to. So, making sure that the messaging is valuable is really key. And then, looking at pricing and packaging, and should we make some changes there? And then from that's when you get into marketing communication and marketing execution and go to market. Like, what changes do I need to make in the market based on everything I've learned in the strategy? What am I measuring? And am I even measuring the right things for the future? And, are there ways I can be more efficient? Maybe what I've been doing won't be efficient looking ahead. What do I do to change that? And do I have the right team to make it happen? So these are the questions that we always go through ourselves and recommend in terms of, when we're working with a client, but also I've applied it in my own life, and, not in the growth gears model, but in a prior role. And I can talk about that in a moment. But again, just curious as to whether you have any other comments or anything you want to add, Mark?
Oh, I think this is great. I mean, if somebody wanted to get the book, where could they get?
It's on Amazon, and or they can email me and I'll get it to you. So C. Eversen, CEVERSEN at chiefoutsiders.com. Just reach out and we'll get the book to you.
Wow, what a great offer for our listeners. Thank you.
Absolutely. Written by our founders, actually. So I do want to pivot to an example that I actually, and I used these questions and this approach when I was a more junior person. I was running one of those business units I mentioned. It was about a $250 million business at AT&T called AT&T Teleconference. And what's interesting is the pivot we were going through, and I'll just stop sharing for a moment. The pivot that we were going through was going from a regulated monopoly to a competitive industry and a competitive company. And the challenge and the pivot happened because of, regulatory issues. We were forced to go through the process of deregulating. We were forced to divest, and we were forced to become a competitive company. I joined AT&T right at the point that divestiture or that whole process started. So I was fortunate because I was brought in at a time when all employees were being trained on, how to change from the old way to the new way. And I didn't know the old way, so I didn't have to make that change. But what I did have to do is deal with what was happening across the company in terms of getting team members and teammates to make the changes with you so that you could get the business to be successful. So when I was running AT&T teleconference, the challenge I had was all of our technology was built by AT&T Bell Labs. And there was this huge not invented here syndrome that was pervasive across AT&T. You could not put any piece of equipment in the AT&T network that wasn't built by Bell Labs. It was like forbidden. And it probably helps. 3 weeks into the job, there was a pony being buried in Morgantown, West Virginia. And the pony, I'm from West Virginia, so it's just crazy. And they cut like a cross-continental communications line. And at the time, our CEO was negotiating a merger with NCR, and the conference call went down. And he apparently threw a chair across the room and said, "We have to fix this teleconference business." So I had like wind at my back because he wanted a change. And I was therefore able to work with customers, understand that we actually had 3 segments of customers. Not everybody was one. We had executives who wanted really special handling. We had corporate accounts, and then we had your average caller. And I was able to work to identify 3 separate platforms because the needs were very, very different. Get foreign technology into the network, which was an amazingly challenging thing. It shouldn't have been, but it was. Double revenue and profits over the course of 3 years. And did that by recognizing that the world was changing. I focused on the customers. I learned what they needed. My team did, not just me, because it was a team effort. And then the team built an entire new solution, pulling pieces together. And we changed how we went to market. We brought in new salespeople to deal with the B2B side of it. And it was a tremendous success. So that's an example that I'm really proud of, but also that I think shows that it doesn't have to be the economy. It doesn't have to be COVID. It could be any type of scenario.
Well, I really listened to the need to be thinking about the future, looking at current events, coming up with a contingency plan. And if things start to change, then you're ready to pivot and you can jump and get competitive advantage by being the one that pivot best.
Pivot or fastest, best, more strategically than the others, all of that, absolutely. And so I just wanted to move on. There are a couple of quick case studies I can also walk through if you'd like, or any questions or comments you want to make before I run through these 3. I have 3 case studies I can share that are recent and highly relevant, I think.
Right, yeah, let's hear them.
Okay, so the first is a Chief Outsiders client. It's an international gym franchise company. And the situation they ran into, anyone that belonged to a gym knows that gyms were shut down during COVID. This company happened to be headquartered in California and has a lot of, their gyms on the West Coast in California. They were basically shut down. They had 0 revenue coming in. And the question became, how did they survive? They had several franchises that they owned, but they also had independent franchisees that they needed to help stay afloat. So what they did is they built an online subscription business. They built content so that people could log on and engage from home. They built a new technology platform to handle all of that. And then as gyms started to open back up, they put all of the materials together to enable the gym to open up with all the proper controls, like little footprints on the floor and signage and all the things that they needed to do to open safely. All of that in 8 weeks, which is unbelievable. Yeah, it was insane. And then they also started a new line of cool clothing that they were selling online as well. And the result was all of their major franchise systems survived, and all but one of their wholly owned gyms remained open. Only one of them was actually closed. I thought I'd written that the wrong way, but only one was actually closed. All of them remained open otherwise, which I think is a real testament to that I know there are gym franchises and even gym chains that did not survive COVID because of the radical change in the nature of that. So I think that's a really cool one. This is a different situation. It felt like they thought it was because of COVID, but it turns out the problem this company was having had nothing to do with COVID. It's a $100 million industrial manufacturing company, and they had a challenge with post-pandemic growth. They were seeing everyone else growing, and for some reason, they weren't bouncing back. They thought they had good brands. They thought they had a good position in the market, and they could not understand why other people were growing and they weren't growing. So what they did is they actually used some ITR tools, and they did an economic analysis. And what they identified, the most important thing they identified, was that their problems started when they looked at the industry versus themselves. Their problems started a year before the pandemic hit, and they hadn't realized that they were slowly deteriorating. So they dug in and they did an economic analysis. They looked at the industries. They did customer research. They found out that customers weren't happy with the products that they had and that they hadn't done enough in new product innovation. And they found out that they had a distribution problem. So with all of that work done, and one of our chief outsiders was working with them to do all of this analysis, they were able to totally turn this around. They solved for new products. They invented new products. They worked on their pricing a bit. They worked on their distribution to clean that up. And now they're in double-digit growth and doing great. So I love that story. I think it's interesting because sometimes it's easy to blame the wrong thing for your problems. And then the last one is a SaaS-based sales enablement tool provider. This company basically had its origins in the do not call list. They were responsible for they're one of the major providers of do not call lists, so that a telemarketing center or a salesperson, a business development rep, can place an outbound call, but before they place the outbound call, check the database to make sure that the outbound call is legit and that they won't get fined. They worked a lot with financial services companies because people tend to get pretty excited about this, and the fines can be substantial, and there's a lot of outbound calling with financial services companies, or at least there was at the time. And what they realized when they brought us in, because they weren't growing, was they were hitting the top of their total addressable market. They were at about 20 million in revenue, and the total addressable market was around 30 million. So the CMO that was assigned to that basically helped them see that you want to keep growing, but you can't keep growing the way you've been growing. So what do we do? And what they worked on was an alternative solution where they developed AI-based analytics so that they could not just have the phone call go through based on, a legitimate phone call to someone that's not on the do not call list, but the technology also allowed them, with a couple of tweaks, to be able to look at the productivity of the people that were making the calls, which was really important for companies as reps had moved out to working from home. This allowed the company to see their clients to see more about what was actually happening on those calls, like were connects happening, how long were conversations, that type of information. Certainly you can get that other places, but this way it was integrated with the database, and they've been doing great since then. They added 5 million in the funnel in one quarter, and as this notes, revenues have doubled over the past 3 years.
Amazing.
Isn't it? It's amazing what just taking the time to think about what's happening. And in this case, the pivot was, I have to pivot because I didn't realize it, but I can't keep growing the way I have been because I've tapped out the market. I've got 2/3 share, and I'm not going to get 100% share, so I need to do something different. So those were the cases I wanted to share, and pretty much the last thing I had here is my email address at the bottom. And just a quick summary. Again, we love working with clients and helping them figure out what's not working and helping them grow. That's us. So that's it. Be ready.
Thank you very much, Carol. This was very informative. I appreciate your time today. And this concludes Helping Leaders Achieve What Matters.
Thank you, Mark.